Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, July the 2nd. The year's 2023. Let's talk trading. Weekly open and gap, monthly open. These videos are for educational purposes only. Your results may differ from mine. Okay, we're starting the second half of the year, a new month. So let's make sure risk management is in place. If you didn't do it the first half of the year, let's make sure you do it the second half of the year so you don't lose any more on any one particular trade than you are willing to lose. So we'll take a look at the monthly open, and right now the month opened at 2686 at 126.86. Or 87, I guess, 126.87 on this broker. We're 14 pips above the monthly open at the moment, 3 off the high, 17 off the low. Seems like most pairs are above their monthly open at the moment. And all the gaps have filled. We're putting in the opening range for the week and the month as right now. So far, we only have about 19 pips, 20 pips of range. We are 613 pips above the yearly open, 146 off the high and 900 off the low. My gut feeling is his price is going to go down, but I could be wrong. And you know, that's one of the things I realized. It hit me yesterday. I forget. I think I'd read something, and then it made me think that, and you've probably heard me say it before, sometimes I should just wait an hour before I place my trade. And what I realized was I'm picking one spot, saying it will get to this spot, and usually it does. But what I failed to do was say, pick a spot on the other side that it will probably get to also. So if I'm biased short, maybe I'm trading towards the pivot or something, I'm thinking that's where it has to go. But before it gets there, it just might go in the opposite direction for a while. And I think that's one of the things I may have been missing in my analysis. So I'm going to work on that. Okay, we're inside the daily inside bar from 5 days ago. We are inside the weekly inside bar from 2 weeks ago. So we got some inside bar action. And it seemed like price opened right about the inside bar low from 5 days ago. Isn't that interesting? So I'm thinking that 2687 cross to the south might be a pretty strong cross. And when I opened up my chart on the phone when market first started, I saw it was right around 2700. And I'm just thinking short 2700. But as you can see here, we have gone above 2800. So it's possible we might try and get back here, maybe halfway. We'll just have to wait and see. No pairs over 100 range, and we're just under 8 hours into the trading day. As you can see, we haven't closed below the weekly open, the daily open, so maybe that's trying to say price wants to go up. But remember, that open is the inside bar low, it's a daily. So I think it could be strong. Range is too low for the ratch, only 19.8 pips, not even worth talking about. Bambino Flex indicator says long, near the pivot long. And we haven't hit the pivot yet. So daily pivot for today is still open. Weekly pivot is still open. We missed by 3 pips, 2682. And the monthly pivot, 2638. So each one of those pivots is to the south. So once again, that makes me think about being short. But looking here at this daily chart, that looks like a return bar. So we might try, price might try to get back to the open of that return bar, which is 27.47, right in the launch pad up there. And we are in the upper wick zone of Friday's daily candle. For the week, last week, if you didn't watch the weekly wrap up, 168 pips of range, nothing to write home about, and the 41 percentile out of the last 12 weeks. And looking at the price action chart, as you can see here, not much price action. Remember, we've got a holiday on Tuesday. So there probably may not be much action the next couple of trading days. We're just going to have to wait and see. That's pretty much all we can do. Right now, price is moving up. Nice move. You can see it's going through previous 3-ball resistance levels. And depending on how many pips you're trying to make, even now as it's tradable, you can see it moved off a 2. And the lower high just moved over a bar. Because we're looking at 33 bars worth. So as it moves, you can see this line will also move. Self-adjusting, dynamic. Okay, so for July, at the moment, we are 5.08%. Close minus the year-to-date open. Let's take a look here. What's the ATR for the month of July? 594. Which is interesting. That's the first month of ATR under 600 this year. Notice last year there wasn't any over 500 until September. So let's just see how this plays out. Okay, that's the ATR. Year-to-date range accumulated. We're at 1046 so far. And range by month only 21. So we've got a lot to go. Now, once again, if we take a look at what this year is doing, range in terms of ATR percent, you can see January and March above 90, nothing above 100, February and June at 76. So once again, all we can do is pretty much wait and see. According to the seasonality, a bottom typically forms again in mid-May. So this is the May, and see a move higher in the early August. So that's pretty much what happened. Except, I'm looking at the daily chart here, the monthly. This is a little bit better. So June, May. So we formed a bottom, even though this was the, I think this was the yearly bottom here. In March. And then we formed another bottom here. And it bounced off that bottom in May. So let's see, a move higher into early August. Just have to wait and see. And as I stated earlier, something I want to work on is picking two spots, one above and one below, where price pretty much needs to hit. Because as you know, I like to call myself Mr. Inflection Point. I'll enter a trade and then price will go the opposite direction. And it's one of those things where, how does that happen? Well, one of the things I noticed in my trades that took me into drawdown or losses is that I usually traded against the M30 and against the H4. Now, maybe I should clarify that. When I entered the trade, maybe on M30, it was red, and then it turned on me and turned green. And so I'm looking at this green M30, and maybe that green M30 matched H4. So what I'm thinking is, going back to some fundamentals, if price is moving up, it'll do pullbacks. So for example, you'll maybe have H4 green, M30 green, then the next M30, as we know, sometimes M30 likes to cover the previous candle body. It'll turn red and it'll come down. Well, sometimes it might come down just a little bit and then reverse, and that's where I get burned. I'm playing for a cover, and then it says, no, we're not going to cover this candle. We're just going to put in a small wick, just enough to get you to take the bait, to go into the trade, then we're going to reverse. And that's why sometimes I don't like trading that first couple of minutes of the M30, because a lot of times it hasn't decided which way it wants to go. So I'm thinking maybe I'll just wait for the M5 candle to close and then see if it breaks out of that M5 candle, whichever way it breaks. Use that M5 as the opening range for the hour, and then maybe play the break. That way, if I'm going south, I might be trading against H4, but I might have enough momentum to get the cover. And if I wind up going with H4, then maybe I get to hop on the freight train and see how far it takes me. But in either case, I still need to pick a point above and a point below that price should most likely reach. And one of the ways to do that is using the ATR. So that's something that I'm looking at. So fellow traders, hope maybe you can glean something from my ideas there. Maybe you have something to add too. Let me know what you think. And I'm going to wish you all fun and safe 4th of July holiday coming up. Even if you don't celebrate it, still stay safe and still have some fun. Because life's too short not to have fun. Can't take it too seriously. We're only on this planet for a speck in time compared to all of history. So don't waste those moments. That's not a good idea. So when you are trading, always remember, never forget. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.